Overnight news bullets. Yesterday we had Swedish PPI out higher than expected at 1.3% month-on-month. 0.6% was expected. In Germany and Norway we had unemployment rate both out as expected. In Germany 8.0% and in Norway 1.7%. Other than that, in the US we had GDP annualized out lower than expected at 0.6%. 0.8% was expected. Other bad news from the US was personal consumption out at 1.9% versus 2% expected. Overnight we had New Zealand trade balance out weaker than expected at minus 320 million, minus 267.5 million was expected. Also overnight we had Japanese CPI from Tokyo out at 0.4%, 0.5% was expected. National CPI was also out lower than expected at 0.8%. It was expected at 0.9%. Market developments in FX with the US bad figures and Bernanke speaking yesterday. Come back to that. Carry trades has been under pressure and euro dollar was sent to new highs at 152.29. But carry trades seems under pressure in the context of falling stock markets and rallying bonds. Dollar yen is slipping to new lows since 2005. In stocks, equities are sliding across the board in Europe, US and Asia. It's on the renewed recession fears out of the US, keeping Nikkei down 2.32% overnight. Fixed incomes, treasuries are boosted by this equity sell-off and the recession fears. In commodities, the commodities are boosted by the weaker dollar. Oil April contract is 3 cents from, or has been 3 cents from reaching $103. Gold and silver also boosted. Silver almost at $20 an ounce. So what's going on? Bernanke's comments yesterday that some small U.S. banks could fail has further bolstered the rate expectations, pushing the dollar yen to 3 years lows at 104.58 and euro dollar to another record high at 152.29 in a rapid succession of dollar selling. Other than that, in a sign of banks growing trouble to manage their ailing subprime lending business, Merrill Lynch has announced that it would shut down most of its First Franklin subprime mortgage unit. Compounding these worries, AIG, world's largest insurer by assets, posted its biggest quarterly loss after a $11.1 billion write-down of guarantees sold to fixed income investors. As I touched upon, record oil prices have boosted the appeal of precious metals, taking the gold prices to high of $97.40 an ounce in overnight trading. Only in 2008, the gold prices have surged by about 15%, and growing inflation fears are set to keep gold in firm demand for a foreseeable future. Today's calendar. This morning we have Norwegian retail sales out at 9 GMT, expected at 0.6% month-on-month. Later today at 10 GMT we have Eurozone CPI figures and unemployment rate, also from the Eurozone. Later at 13:30 GMT from the US we have a lot of figures: personal income, personal spending, and also PCE deflator and PCE core. We also have some Canadian figures also at 13:30. Next week, Monday, not that many figures. ISM manufacturing and ISM prices paid out of the US. On the 4th of March, we have GDP out of the Eurozone and GDP out of Swiss. And also, very important, we have Canada bank rate. FX trade of today, the theme is risk aversion, and we look to sell dollar yen on rallies. We will sell with stops above 159.85, looking for a sharp move lower. Our equity trade of today is with the pressure on financials from Bernanke yesterday and the ailing recession fears. We are selling Allianz in Germany. We look to sell between 120 and 121, targeting 110, keeping a stop above 124. We don't have any futures trade today, so thank you for listening and have a good weekend.